Welcome to the Payment Shed podcast, the weekly podcast that dives into the big topics, trends, and people shaping the worlds of payments, fintech, and business leadership, with your two co-hosts, myself, Grant Evans, and Justin Hanna.
Welcome to the next episode of the Payment Shed podcast. Today, we have James Neville, the CEO and founder of Yaspa. These guys are driving the next chapter of open banking. James, please give us an introduction and a little bit more about you guys.
Thank you. Good to be here. Thanks for the invite. So I'm James. I'm the CEO of Yaspa. We're an intelligent payments business that combines identity and money on a singular transaction. Our goals are to reduce fraud and friction in the regulated spaces, i.e. those spaces that typically have high fraud rates, you need to have KYC acceptance and need a way to connect the person's identity to the actual transaction. So we leverage open banking, AIS and PS, combine that in a singular flow. And we've been operating across Europe and about to open in the US. So yeah, lots of good stuff to talk about.
Fantastic. And kind of before we talk more about Yaspa, kind of what's your experience before Yaspa? Why Yaspa?
Why Yaspa? So I just depends how far you want to wind back, but like 20 years in tech, I started my own business as an entrepreneur before Google and Amazon was a thing. So I've been coding since I was like 8 years old, and that is a damn long time ago. Most recently before I started this, I was at Sportingbet for a few years. I was at Just Eat for a while. I was at WorldPay for a while before all of this kind of acronym soup of GDPR and SCA and 3DS2, 3D Secure for those that don't know, all coming together with PSD2 around the time of, early open banking. And a lot of the payment space being very concerned about conversion and what that would mean when we introduced strong identity control. So fraud and friction to us has always been like it's a bit of a seesaw, right? So, you relax your fraud controls and it makes things much more difficult. So we've always been about making things simpler to transact, but reducing fraud at the same time. In WorldPay's lands, I know you're ex-WorldPay as well, the concern was A, conversion. Secondly, how do we kind of make that repeatability of name, address, date of birth on presentation of a card transaction simpler? So we started the business to tokenize identity. Initially, the business was called Citizen, which is clear why you called it that. We worked for a while with the banks, and then GDPR obviously came along, and the banks got really scared about sharing identity. We pivoted. We got our PSD2 license, a kind of authorized payment institute with the FCA, and we've kind of been building ever since through that. We recognize after a while that Europe had some of its challenges in payments, particularly around kind of chargebacks and kind of return rates, as you call them in the US. And we've been constantly building into the A2A space. And the same is true of the US, of course. Has got some challenges too, but I guess we'll kind of come to that after.
What would you say would be the earliest challenges that you had launching an open banking business as well?
So when we started, we wanted to integrate every single bank. And I think when you look at how the space has evolved, you've got the banks obviously combined with the various aspects of Europe to build the rails. Then you've got the aggregators over the top. We realized after a while that we shouldn't really be an aggregator. We can integrate the banks as we see fit. But the game for us was not in infrastructure, it was more in the payment flow itself. And actually getting reach across Europe has been probably the toughest job. I think I mentioned it to you earlier. We had late 2019, just after we got a license, one of the banks say, we neither have the inclination nor the resources to comply with regulations. So a lot of this has been the journey for open bank for all of us, infrastructure and onwards, has been like some of the pushback from banks and the broader ecosystem. As much as we say open, the banks don't think they want to be part of an openness. So that's probably the earliest challenge, is getting some kind of critical mass and getting over that whole hump of banks not wanting to play ball. But we're in the UK. Banks have been much better in the UK than they have been across Europe. But then I think just beyond here, the other challenges really are the things we were supposed to do in 2019 and 2020 when COVID first kind of kicked off. We haven't done half of it. The roadmap was there. We were supposed to have been done with trusted beneficiaries, VRP. I mean, I know you go on about VRP a lot. It's been the bane of lots of people's lives. But
cover that later.
We're 4 or 5 years in, and we still haven't done a commercial VRP outside of sweeping. So I just think there's a lot of work to do, and I think the regulator has a really strong job to play in trying to make some of these things happen, because they are of benefit to consumers, not necessarily just to the bank.
I feel like 2025 is a real, and going into 26 is quite a poignant time for open banking as well. It's been a very busy market, lots and lots of startups, scale-ups within the open banking ecosystem. We've seen some larger players like Kevin obviously disappearing from the market. More recently, Ordo were acquired and then obviously pulled out of that market by the company that acquired them as well. What really differentiates Yaspa, but I guess has also given you that longevity to stabilize? I know you talked about hiring up recently as well, and you're scaling when others are maybe more slightly in decline in the sector.
Yeah, so we lost Vine as well to Terra, but not lost, but Vine sold. I think it's really sectoral for us. We started this journey saying it would be fantastic if you could identify and pay in a single transaction. So why are you having to go through a registration form, a KYC, and then ultimately pay? You've got models like Bank ID in Sweden that allow you to do the same thing on a transaction. Ultimately, PayPal allows you to do a whole element of that. But pay by bank, whatever you want to call it, we recognize that as like the strongest term. We did a survey last year that determined that pay by bank works where you've got a kind of captive volume in account-to-account transfer. We talked earlier about kind of DCMS in the car space, making a deposit to a car dealership. It's high value. It doesn't have to be done in 10 seconds. It can be done in 30 or 30 minutes, and there's recourse after the payment that kind of suffers some of the things around settlement timings and so forth. E-commerce to us, buying a new pair of Nikes, he's got some Nikes on, I don't know if you have as well, I know I don't today, but buying a new pair of Nikes and doing that on a single transaction, you arrive on a list of payment options, a palette, if you will. You've got Klarna in there, you've got Apple Pay in there. Even if Pay by Bank was on there, I'd be inclined just to do Apple Pay or PayPal, something that's like familiar and almost habitual in nature. So, and people are creatures of habit, right?
But it's quicker though, right?
Yeah.
Apple Pay is quicker than open banking.
There you go. So if you then to look at a sector like trading, FX, gaming, anywhere where there's a KYC element, where people are familiar with making larger transfers, crypto's a good strong example of that. People are not using Apple Pay to buy Bitcoin, right? There's an open goal there in the manual nature of that operation. So account to account kind of fills that. You talked a little about, or you mentioned Kevin, we hummed and hawed a while about kind of point of sale type situations, and we've integrated with kind of retail machines, but that's been the hardest job even in the UK, because if something doesn't happen in person within 10, 15 seconds, what's the recourse, right? You're not going to make another payment, so you almost need to predetermine when the payment hasn't settled and almost refund instantly to go either try again or do something else. And I think that's been the kind of lack of focus on unhappy paths has been some of the challenge in user experience with Pay by Bank.
You talked about that automotive example as well, and I talk about automotive quite prevalently as that high average transaction value sector. And you said, the guy at the dealer kind of winced when you pulled your card out, right, to pay for your deposit or your card, right? But then you've got a difficult situation probably where that individual within the dealer has been told by their management team, try and get people away from card wherever you can. We've got Pay by Bank now. Is there still then, you're obviously not going to need educating on that, but as someone that doesn't know Pay by Bank, that staff member has to explain what it is, how it works. They might not be able to do it on their app, or they might not be familiar with it. You create a friction point then with what is, you could have just put your card into the card machine and paid that amount. Yes, there would have been a higher charge, but there's also then that, could they bake that card cost into their top line price for the vehicle in some way, shape, or form?
Right? People will charge you, but you're
not
in the card, you're not supposed to be surcharging for card payments, right? In any way whatsoever. So I do think there is an education piece that has to happen, but it's, that was all part of the OBIE. There was plans to do lots of, custom consumer education. It never really happened. You look at other markets like, the Netherlands, they had Ideal for years. You used to walk through Amsterdam, and if you could go to a shop, there'd be like no cards. It'd be like Ideal or cash. So they're very familiar with those schemes. So forth, there's familiarity there in Germany.
Look at Brazilian Pix, right?
Right.
If you want it to happen, you make people aware of exactly what's happening.
Yeah. But then you need to make the experience work.
Exactly.
Right. So in the UK, you can scan a QR code. There's familiarity. You've got to remember, going back to coronavirus, QR wasn't really a thing. now it's ubiquitous and everyone knows because they bought their eat out to help out type stuff on a table, and that familiarized our whole population with QR. But we've also got app to app redirection in the UK, whereas like Europe doesn't really have that. So your European experience is scan a QR code, open up a bank screen, type your IBAN. Most of them are familiar with it. They've got their IBAN saved somewhere. It's pre-filled for them, but the experience is subpar, right? So you've got to fix these parts of user experience, which, we obsess about conversion and on clever things around how we represent IBANs, skipping screens, and we do that on a bank by bank basis and country by country basis. The US then presents all the challenges around open banking needs a login and password, right? Are people going to store that? Is that going to be in their password manager, BitLocker, whatever that happens to be? Do they feel safe about sharing username and password? You remember the early days of Trustly, you would log in with username and password, Trustly would go off and effectively screen scrape your payment, and people got familiar with it early. I'm not sure people are comfortable with that now.
That's though, right? Where people, they want to gamble, they want to play, they're probably going to go through the payment method that they're told to, right? So there's exactly a sector element to that as well.
But the US is largely driven by that, right? There's very little OAuth, there's no app redirection, it's username and password, consent presented, and then we make a payment by essentially like a push ACH, but that's a consented push. But the chargeback rates or return rates are likely to go up as a consequence.
Well, we talk about some of the open banking platforms that have gone down, and maybe some of the open banking platforms that have been quite successful are probably them open bank platforms that are selling to some high risk sectors and being able to get good margins on open banking as an APM, as opposed to not wanting to offer card payments because the acquirers say no, the chargeback rates, etc., etc. Open banking, there is a niche definitely in some sectors for open banking. A conversation I've had with many of the issuers is why would we offer it when we're making 20 basis points in change fees, right? Yeah. So that's always going to be that. It has to be an alternative and sit alongside card payments as opposed to replace it.
Yeah, but we said that initially that there's always a commercial opportunity for banks. So share of revenue, there was premium data. I remember what it was called now. Premium data was mooted as a way for the banks to commercialize onboarding use cases. Like 50 pence between the TPP and the bank makes a whole heap of sense. You've got then a direct identify and pay type solution. A couple of banks, we did some POCs on that, but you've got to get every single bank on board with that. Whereas the UK and Europe vis-a-vis kind of the US way of doing things. The US has had commercialization through the Plaids, etc. of this world for years now. So they've already built the commercial relationships with every single bank in the US. So 1033 and all those things I think you want to talk about, like the commercialization there doesn't need to be the same level of openness to make it work because America just works on commercial agreements.
So we've seen Visa's decision to exit the US market. I'm saying exit because we don't know it's going to be an exit until they really exit. What do you think that's going to tell us about the rest of the world when it looks like one of the biggest markets wants to pull out?
I think back to what I said about commercialization. Maybe that's already there. Maybe they're worried about not having market share and bringing their previous investments across Europe over there and making them work when the lion's share is Plaid, MX, Acquire, and Finicity, right? Finicity has a great share than Visa, and that's a MasterCard company. So maybe they don't want to be seen as competing and losing. I mean, I can't really speak for what their broader strategy is, but again, it's been commercialized. There are mainstays there that work really, really well right now. Maybe it's just not Visa's game to play in all of that. There's also everything that's happening in the States. We were all positive last year. Las Vegas, 2020, 1033 just passes, and then you have like the notion that the Financial Data Exchange, FTX, will start enforcing standards, and then we come into a Trump presidency, and it's not necessarily open banking, it's just get rid of lots and lots of government departments. All of a sudden 1033 is weakened, and maybe players like Visa just want some stability in regulations.
Like 5+ years in the making, right, as well for that, and then overnight just gone pretty much.
Yeah, but look how long it took the UK to standardize, right? Like, TrueLayer, Tink, Yapily have all spent inordinate amounts of money to get the banks to conform to what effectively is a standard, but they're all very different. They're putting like a normalization layer on top of the banks doing various different things. Try doing that at even greater scale. I mean, we've got like 9 banks we care about, big banks in the UK, try to do that in the US.
Yeah.
It's just wild. I mean, Germany as
For every
well.
state.
When you look at German institutions, you've always got the big banks, but then they've got, federal by federal. There's like thousands of banks in Germany. This is quite a scale challenge to do, and it's probably the same well, it is the same in the US.
There is some providers, right, like Volt, for example, that seems to be doing quite a good job in putting out the rails for businesses to use their platform, right?
Yeah. I mean, look, Tom, I hope he gets well soon. That's really, really, really sad news. Like, he did a really good job in trying to push the standardization forward for PSPs. I mean, we've been more niche than Volt have in a lot of respects, but there's also the challenge there of making all of that normal. They said they were going into the US, didn't really make it work in the short term for exactly the same reasons that Visa's a little bit concerned about the whole thing. Bringing FedNow and RTP or RFP together in one unit, it's a valiant way forward. He picks together on one integration as well, but the US is still challenging that it's expensive, right? The FedNow is it's tens of cents on amount. I won't talk about commercial rates with parties, but compared to the cost of ACH being so low, there's been premiums now charged for instance. So we just need a bit of time for everyone to realize that the playing field is being leveled, and then to bring those costs down to be at a par with either a cheaper card payment or with something like ACH or its older equivalents.
And what does you've obviously moved to the US as well. You've launched an office out there. What does the US market look like for Yaspa then, in terms of your growth out there, your focus out there, with all of the moving parts that you've kind of...
So we talked about kind of the regulated market generally. I think one thing that the US offers, there's the commercial nature of like consented data, right? That's been weakened somewhat, but let's hope that somewhat holds. We've got the ability to get more data from the US banking system than you get from the UK. Let's say premium data happens, we commercialize it, great, but there's a bigger market opportunity there with deeper data. We then have lots of different types of rails. So we have all the variants of ACH, same day, next day. We need to work towards a guaranteed offering. And actually, we spent a lot of time in Europe making SEPA credit transfer, much like SEPA instance. So we take a lot of risk on our transactions. We poll banks, we look at the state change messages from all of them. We know with levels of certainty what the settlement time will look like. We will do the same thing in the US, but there is a big opening there for what we already do in Europe to take into the regulated gaming sector, for example. We just took on a 12 million investment round in order to stand up the US, purely to stand up the US. So that's one opportunity. And there's lots of other stuff going on. Obviously, the Genius Act passed, crypto is growing, stablecoin offerings are going to be growing over the next year. So we see the US as an evolution in our journey. It's not necessarily like going to be the main pillar in the next year, but I think a lot of cool things are happening to support where we want to go. Playing
into those sectors where the growth exists is the right call as well. We've seen open banking providers that are focused on the shiny retail brands, the things that they think they see as what are the best poster childs for case study that show we're doing well in the sector, even though we're not making any money. Well, you can actually say, well, the AISP side of thing, the monetization, I mean, Plaid probably don't get enough credit for what they've done, particularly over in the States, right? Huge. I mean, but then also you talked about Trustly and the gambling stuff, you guys focusing on gaming, gambling, and then monetizing AISP data. Why shouldn't we be doing that in the UK in terms of some of the stuff that it drives, right? So KYC, onboarding solutions we've talked about for financial services businesses. Yeah. You've got accessibility to lending for people that maybe wouldn't get that facility without the benefits of open banking. Like, why not put a price on that? We get charged quite often in the payments world of payments are too expensive. So being able to tap a card and get that money same day or next day, it's not far off open banking these days, right? There are real tangible benefits to the card payment ecosystem, and it's always like, drive that price lower, drive that price lower.
But not even on just a payment, but on, like you say, on the AIS side of things, your bank identity, is probably more qualified than the passport you pull out, whether it's AI faked or otherwise. I did try it early in the journey, see if I could create a passport for myself, and I could. You can't now on most of the major platforms, but you can get James Neville, 1 Long Street, London from the bank. That's generally a better representation of a passport. And then the deeper part that you get from someone's transaction history, effectively financial health, right? You've got stronger earlier signals of someone's degrading credit standing, financial health, than before the CRAs see it. So you can see somebody's regular card payments or loan payments, you can see them stop. Have they repaid the loan, or did they miss a payment, right? What was their balance at that moment in time? So you can start to see all these early indicators. But given we work very deeply now in the iGaming sector, we recognize there's a lot of problem there with harmful behavior as well. So we're able to look at somebody's transaction history and determine, have they had changes in behavior in their depositing? Has that influenced other factors in their spend? Are they gambling, gaming within disposable income, right? There's a big difference between if somebody's got 10,000 in their bank account and they're gambling 100 quid between someone's got 500 and doing the same. And the regulators in UK and the Netherlands are all moving towards what we call an affordability regime, which is valiant, and it's probably the right thing to do, right? Because there are a handful of people, as a fraction of a percent of people, that do have gambling addiction. So how do you notice that earlier? How do you kind of figure out that somebody has started to change behavior and alert yourselves as an operator and them to the fact they should call down? I think that's quite a good space to go, but affordability in Europe has been very much about hard limits. So let's make sure you only gamble 200 euros in a month, or 400, I think it's like, depending on your age range. But that's very different between someone, again, with 400 euros in their account or 4,000 euros in their account.
The Payment Shed podcast is proudly sponsored by Tammy AI, the market intelligence and lead generation platform built for sales and marketing teams who want precision, not guesswork. Tammy helps businesses identify their best fit prospects, gain deep market insights, and boost revenue growth. And it really has become the go-to solution for the payments and fintech industries. Both Justin and I have used the tool in previous organizations that we've been in, and we really can't recommend it highly enough. There's a link in the bio to click on the Tammy website and find out more about their product. You really won't regret it.
I think merchants, though, if you're collecting payments, whether it's via sweeping in the future maybe, or even via card payments, I'd be using AISP right now to see that customer's data. Can they afford for us to attempt to take that payment tomorrow? If they cannot, because the money's not in the bank, I should be communicating with that consumer and saying, hi, James, you've got a payment of X amount coming out tomorrow. If you are struggling, please contact us.
Yep. Because
the customer doesn't have the money in the bank. To me, not one are you looking after your customer, you're also saving yourself fees.
100%. I mean, same with direct debits in this country.
Exactly the same, right?
I've
use AISP.
I've not managed my current account right, and I've bought something, and crap, that direct debit came out the next day, and it needs to be. There's all that kind of stuff that you go through. In the US, it's kind of even slightly different because you're making a payment without you doing it within a number of days. So, like ACH, even the same day could be the next day. You don't know the current balance. You don't know if somebody's done. Previous returns. You can do a quick scan of the bank account and determine the risk against that transaction.
Do we need, though, to do? It's a great point, but the consumer has to give their permission, right, at some point to say, I'm going to let you see an active balance of my account. And I think in the world of Brits particularly, there is a fear of sharing some of our data. We seem a little bit more reserved than other parts of the world.
That's my gambling money, don't touch it kind of.
Well, the US is unfettered. So, they have a different approach to data, whereas over here, and I think we tried an ID card in the Blair era, or we put it out there and everyone kind of firmly resisted it. And I think that goes all the way back to the Second World War if we trace its origins. But in Estonia, you can just do digital ID and no one really cares. It's like it's seen as a benefit. A lot of the earlier open banking journeys were about explicit consent. So when you went, I'm going to interrogate your bank account for balance, transactions, blah, 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 for this singular purpose. That's a big wall of text, and it's like terms and conditions. It's quite scary. And the word consent is quite a scary word. It's not like authority or approval. Consent is it's an awkward word that we don't use very often in lots of contexts. So, I think we got an open banking parlance, some of that wrong, and we made it quite complicated for people that we didn't really need to.
Is there a marketing reason for that? Like, have we marketed open banking? I've been calling it open banking for a start. Obviously,
open banking was the wrong word.
Pay by bank is better for the payment element, but we always talk about, we walk down the street and we ask 10 people what open banking are. They no clue, but then you explain they probably paid their credit card off last 100%. Month using it. They're like, that's open banking.
We all live in a little bubble where it seems quite nice, and open finance seems quite helpful and useful.
Ask what it's self-employed, what open banking is. They might not know what it is, but they used it in January.
But equally, I don't want my bank to be open. I don't want my bank to be
Yeah.
open. It's kind of it's just the nomenclature around some of this is a little bit wonky.
That we've kind of covered the US. Great geo expansion for you there, and congratulations on the raise as well. Exciting times for the business, obviously. Add to that a new office opening in a city that's very close to my heart, where I studied and met my wife. So you've honed in on.
Congrats.
Thank you very much. I actually lost my wedding ring on a beach the other day, so I'm not in the good books though. But yeah, I know. Dealing with the insurance company at the moment. Get some open banking involved for the payout there. In terms of it, Leeds itself, Manchester's little sibling, potentially. Manchester always gets the attention as kind of the northern powerhouse. There's some amazing companies based in Leeds. So explain that decision. Why Leeds? What does that bring for you guys as a business opening up shop there?
So I don't think it's just Leeds, although we've just made a big investment in scaling a team there. It goes all the way back to the start of the business. And actually, really early days, coronavirus just hit. So you're like, what is the point of having everybody centralised in an expensive office in London? Just as that hit, luckily, our lease had run out. So we're like, let's not renew it. Let's just go fully remote. We were meeting people in Victoria Park in the east of London. We're playing frisbees with each other and, having a couple of drinks and getting together a couple of times every month. And then we realised, well, if you're going to behave like this, why would we hire just in London? Why would you hire there? Why won't we hire somewhere else? So I ended up, our head of product is in Manchester. Our CFO is in Manchester. Our head of compliance was in Manchester. She's just moved. And we're like, okay, so that works. People are good at working remotely and kind of coming together. And then we said, well, where would we set up a new office? And actually, there's a good tech cluster in Leeds as a consequence of the gaming sector being kind of one of them. But comparing that to London, where we can hire, it's expensive. You're now fighting with the banks because the banks have opened up remote working for everyone and going back on their old selves now, unfortunately. People want to work 1 day a week in the office, but they still want London rates, which seems like a really awkward way to behave. So you've got kind of tech teams that some of them want to come and some of them don't. Why would you not just go somewhere else and see if you can set up another cluster? And there's a big tech undertaking over there at the moment. So we figured that was the right thing to do. We had a couple of people already working in the area and we scaled it up. So we'll see how it goes. I'm a Yorkshireman by birth, so I'm a Middlesbrough lad. You wouldn't tell by my accent. Apologies for that. But yeah, I have Yorkshire dear in my heart.
Very good. And, I think there's definitely a bit of a fintech hub opening up in that part of the world. When I was there, I know Skybet had a big office there. They did an incubator program with Sheffield University, I think it was, with grad schemes for mainly focusing on techies, like you say, product orientated people and having that emerging talent pool available at their disposal. And then Direct Line, Channel 4. There's some really big brands going in that you're going to be in and amongst in Leeds. So great for the area to have another great employer opening up there.
Thank you.
So looking across kind of the next 12 to 18 months, obviously with your new offices being open and the investment, what do you think will be the biggest kind of challenges for you and the industry over the next kind of year or two?
I think there's a mix of stuff going on. So, across Europe, you've got the kind of mandate for SEPA Instant. That could be a real benefit for all of us. It could equally be another fight that we all have for 2 years. You've got PSD3 normalizing kind of some of that. Let's see what the adoption of that looks like.
It's commercial be a fun time, isn't it? PSD3.
Oh yeah,
there'd be consultants out there rubbing their hands with PSD3, wouldn't there?
Yeah, I mean, I started this business when PSD2 was just about to be a thing, and it still took another 2-3 years. There's a lot of stuff happening in the UK with respect to kind of commercial VRP. I still think without a dispute model and all the things that normally go with kind of schemes and DD, that's going to be a bit of a challenge for anyone. But VRP doesn't really feature too much in our world over here right now.
Let's get, as you've mentioned it then, let's get your take on commercial VRP and where we stand at the moment, because we're back into that. It's coming again. There's more banks signed up now. What's the reality?
I haven't seen the engagement I'd like to see, so I'm going to let everybody else kind of follow and figure it out, because it's not the strongest use case for us just yet, but I still think it's a while away. And like I said, dispute management, all those other things have to hang together. There was a point where Visa and MasterCard were playing around with various different schemes. They approached us and we've all talked and we all tried. Maybe there's an apathy to wanting an existing card scheme to run a scheme for A2A. So there's lots of just everybody being a bit protective and a bit cautious, I think, at the moment. So, for us, we'll focus on the US, and I think that's a big enough challenge. We'll see where the dust settles in Europe. over the next
What are
year or
your
so.
thoughts, Grant, on commercial VRPs?
I think it's quite well known what my thoughts are on commercial VRPs. I still think we're in this stage of certain individuals making out like it's very imminent and it's going to replace direct debit, and I just don't see it happening for a long time. Direct debit payments still make up 7 in 10 recurring payments in the UK. They still grow month on month. They're an established solution. Consumers know it. They trust it. There's protection that exists with it, like you say. So elements of what we've seen deployed as so-called commercial VRP is an initial open banking payment that rolls into a standing order. It's not truly utilising open banking.
I mean,
where
we first talked about it, the combination of trusted beneficiaries with limits and be able to say, this merchant can do up to £100, or they can do it with a prescribed frequency, and people can't just keep. And you can manage that with consents within the app experience, and any kind of changes to that. We're not anywhere near close to that, and I don't want personally, I wouldn't want unfettered DD access to my bank account. Like SOs are fine, and a DD for the same amount, but like an open-ended book and VRP, don't think so.
Yeah, I think my biggest concern with commercial VRPs is we're trying to build a product that's maybe not needed in the industry, because you have direct debit, you have standing orders, you have card payments. Why would you need a different way of?
I think DDs and SOs, the problem with them is like the process to establish them and change them. It's the mandate that's hard. So it's not flexible, and nobody's really.
It's the setup of it, right?
Right. So no one's really gone to the level of being able to kind of change that mandate or adjust it in real time. That was the promise of VRP, was like moving those limits around. But I think we'll get there. But it's a little bit of a hammer looking for a nail at the moment.
Absolutely.
I think.
Yeah, I'd be surprised if I see it this year, but I've seen so many businesses say it's coming this year. I'm also really interested to see what a simple use case is, because I don't know what a simple use case is. A lot of people say
I guess
financial
the simplest
services.
one is like SaaS subs, something like that, where you're on one tier and you want to shift to another, and you don't want a different DD mandate or something like that, right? That's
niche, right?
I don't know if that's niche. There's a lot of payments in SaaS that people would prefer not to be against the card.
But do they prefer to be not against the card?
We do as a business, 100%. Yeah, because some of them go against my card, and then some are against someone else's in tech, their expenses card, and it's an absolute mess. Can we squash it down into one thing? That would be much better, and then manage all of that within your corporate business treasury type account.
No, it makes sense. And do you think the next stage is going to be driven more by banks and fintechs or merchants themselves?
I don't think it's banks. Apologies to anyone out there from a bank. They've not really pressed innovation forward. I think we've got desires as fintechs for things to be better, and a lot of it's not really new features. It's just about similar capabilities and standardization and normalization. So there's always a big push for that. I think on the merchant side, we have lots of demands for various different things that we can do right now. Obvious ones would be like reverse payments. Can we combine AIS on a reverse payment? Would be the most fantastic thing in the world. Was on the roadmap many a moon ago, suddenly disappeared for it. So there's little things like that, and then us pushing things like app-to-app redirection in Europe would be fantastic. That's the stuff that gets conversion numbers higher, and conversion numbers drive merchant acceptance, right? Reduce cost and good conversion. At the moment, a lot of places you've got pockets of good conversion in certain countries and poor ones in others. So merchants kind of look at it as, well, I've got this kind of fragmented way of taking payment for certain markets. You could be seen as being an APM of choice for certain areas, but others, they would just rely on cards. So until we've got that conversion, standardization, ubiquity that I think PSD3 will already start enforcing, I think you won't get much draw from merchants. You'll get it more from the fintechs.
We were talking over coffee before a little bit, as you mentioned Europe there, around some of the challenges in the European market. The EPI and Wero and what they're looking to build obviously taps into quite a lot of A2A payment methods. What sort of challenges do you think they're going to face on that journey to try and create a singular sort of payment wallet across all of Europe?
Look, it's security generally is probably going to be the strongest thing. We're going to go back to EIDES to all the banks and a standard there. Like the banks are all challenged with new ways of doing things generally. It's going to be about everybody agreeing to stuff at the end of the day. Like, quorum across the sector, and I think we're far from quorum on even the basics right now. So it'll get built. It'll slowly get built, but I think it's going to take you in the space of a decade rather than a few years.
And there is momentum in open banking, right?
There is,
So
100%.
and it is moving, and more people are starting to understand it who maybe didn't understand it 6, 12, 18 months ago. Do you think regulators are stopping that momentum, or do you think they will improve their speed for the rest of the industry to get things moving a little bit quicker?
I mean, regulators, the only thing that they've got to give really is making sure that people or banks and the sector generally conforms to a normalized behavior. That's the best thing they can do. Again, PSD3 is trying to do some of that. I think the regulator needs to think about what an independent scheme looks like for dispute management. That's been a big hole for a long time. And again, what we do in the UK with respect to kind of premium data, data security, consent, data sharing, like what does that all mean? Because the banks aren't going to figure that out for themselves. They're going to leave it well alone. So unless that regulator comes at it from the perspective of determining the banks that own customer data, they don't own that customer data, the customer owns that data, and the regulator can make that more portable in the same way that they made switching of accounts portable. That's the initial driver from the CMA9 and open banking. That's the role they've got to play. But, they're underfunded. They're looking at all kinds of other things. Getting another OBIE that has some teeth all the way across Europe, I think, is a very tall ask right now. But I'd love it to happen.
What are your thoughts on orchestration platforms for open banking? Do you think it's a thing?
I mean, to an extent, we do an element of it. That's kind of what Vault does, is its kind of main thing. It will put together PICs with RTP and FedNow. We do orchestration of orchestration as well. So in those markets that we don't have direct bank connectivity, because we're not an infrastructure player, we use all the main aggregators. We will route some traffic through one and some traffic through another. So I think there's a lot of merit in that, because some people have better integrations with the banks. Don't tell me why, but some people have higher conversion. Everyone's done it slightly differently. Again, let's all do it the same way would be really, 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 really helpful. So we have an orchestration platform that allows us to use other TPPs ourselves. We have various different ways of kind of doing an AIS and PIS journey. We don't do it the same way in every country. In fact, we don't do it the same way with every bank. And that's
pure optimization though, right?
Yeah.
And if we then, you've touched on elements of it, but then if we look at the road ahead for Yaspa in terms of where the business is going, I guess a couple of things. Your biggest opportunities as you see it in the next few years, given some of the challenges we've talked about, regulation, different markets, the US you've obviously mentioned as well. But if you're achieving your vision for the business over the next few years, where does that see you go?
It sees us go into lots of different verticals. And again, there's a bit of a mental roadmap for me that is firstly about regulation and bank capability, second around consumer education and adoption, thirdly around how the rails develop in certain geographies. I mean, Africa's a hugely appealing market, the Asias as well, but we've already seen how fragmented Europe alone is without trying to bring the whole of Africa or the whole of Asia together in kind of one piece. I think.
Can I ask you about LATAM on that as well? Because you've named some continents. Obviously, a lot of
I think LATAM's driving towards PICs.
Yeah.
Right. So unless we just become like a PICs orchestrator, like they've already done that, right? Like at a national level. And we might see that other countries do that at a national level. Again, part to your point, do we want to be an instant payments orchestrator or not? I mean, we can be. There's more that we do outside of a fast draw payment or a PICs payment that brings that whole journey together, as part of our kind of general USP. But you start to see kind of PICs type proliferation across LATAM as well. So in a way, you've got to be led by the regulators, the banks, the schemes, etc. Look at what Canada's doing, right? It's Vocalink driving the RT. That was supposed to be essentially ready last year. It's probably going to be another year from here. But what does that look like? Is that Interac? Is it an independent? Like, what does it look like? Can we add value by pulling that together with some of the other aspects we do? Don't know just yet. I mean, when we set to build this business, we looked at things like Bank ID as a beautiful way, although very limited in its reach, a singular country, to bring together all the things you'd want to do online from a narrow funnel all the way through to a payment. So the more ubiquitous I can make that internationally would be one of my core goals.
Quick question, completely off topic. Yaspa. What does Yaspa mean?
It's Pay ASAP. It's an acronym of that.
Okay,
or
nice.
an anagram of that.
Yeah, okay.
We threw a lot of kind of stuff into the mix. We had a big kind of whiteboarding session we had a whole wall full of stickies, and we started as, what kind of things do you like? And you expressions. I think one of them was somebody's name, which actually got included in it, and then we got the acronym out of it. No, I think it was one of our staff members. Her nickname is Yaz, or at least the start of her name is Yaz. So that went up on the wall. Pay went up on the wall. When you start putting all these things together, you come up with something. I mean, I'm as surprised anyone else that Yaspa as a 5-letter domain name was available.
Yeah, I'd be surprised at that as well.
Yeah.
And you mentioned there around open banking industry and where you want Yaspa to go. What do you want Yaspa to be known as in the role of open banking in the future?
I mean, for us, it's about connecting identity and money. That's been our kind of North Star ever since. It's like the singular way to make a verified payment in less than 10 seconds, ubiquitously.
Fantastic. And before we go, James, one of our favourite parts of the show, the shelf of shame. So for us, we'd like to know from your perspective, what would you like to bring to the shelf of shame, and we'll make that decision if we banish it forever or we allow it to carry on in the world of payments and fintech.
Not kind of buy now, pay later particularly, but the application of buy now, pay later, and particularly into like having something like that on Just Eat, right? That makes me, I mean, sometimes I don't want to pay 50 quid for a takeaway because I've spent a lot of money this month and the kids are not going to get it. They're going to get fish fingers or whatever we normally do as a family. But like buy now, pay later on a £50 takeaway, that disturbs me. And that kind of low value commodity type sale and the application of it absolutely needs to go in the bin.
So the use of buy now, pay later for small items. So
particularly consumables, right?
Yeah, it's an interesting one. I always have a thought on this, and it was actually someone within the finance sector that mentioned to me, you have a single mother with 3 children who's just had a newborn, and she's deciding whether or not she puts her nappies on buy now, pay later.
That's wild.
And it sounds crazy. However, and this is the point, is them nappies may be on special offer today.
Yeah, and buying a big pack to spread it out, but still spreading over months, because it's not
the way
weeks,
that most
it's months.
Retailers are looking at it, right? They're doing it for a reason, because they want to try and help people that may already be vulnerable.
I'm not a big fan
Going
of that.
down the rabbit hole. I think that one will come up quite a lot, and I think we're quite happy to put that on the shelf for shame. So yeah, I know I would agree with that as well. So just to conclude then, where can people find you? Socials, get in touch, find out more about Yaspa as well.
So we're at www.yaspa.com. You'll find us on Instagram. You'll find us on LinkedIn. You'll find us all the usual channels. I mean, you'll find me, James Neville, on LinkedIn. If anyone's got anything interesting to talk about, happy to connect, happy to chat. Feel free to reach out.
Brilliant.
Perfect.
Thanks for joining us in the Payment Shed.
More than welcome. Thank you.